Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about European ETFs that invest globally into real estate. And this is part 1 of a 5-part series. So I want to first start with going into depth about how you can invest in real estate. So in my opinion, you have 3 possibilities, and that is you can buy your own house, and that's already a good decision when you did that. So owning a house is really important in my view because rents always go up. And if you need to start renting, that's okay, but build up your reserve as quickly as possible and make that you can buy your house as quickly as possible. Everybody that says otherwise, they either have too much money or they don't know what they are talking about. And number 2, you can also invest in another house and then rent that one out. But for me, that is a lot of work. So then you have a third option, and that is investing into stocks that own real estate, and more specifically REITs. And they'll buy certain rules so that they need to pay less taxes. And one of those rules is really interesting for us as a dividend addicts because they need to pay out 90% of their income as a dividend in order to get the tax reduction. And yeah, you have the rule in America, you have the rule in Europe, so almost everywhere in the world you can find REITs. So when they are on the stock market, those companies, you can opt to buy their stocks. Then, of course, you also have real estate funds. So these are then the the old funds, I should say, because you also have the exchange traded funds that invest into real estate, and so the REEs, and they can either invest in REITs or they can also contain funds, and so they can make they can make combinations. Of course, you have real estate funds that do the same. But most of the time, when you invest into a sector and not into an index, more or less, then the ETFs will be almost always a bit cheaper in total expense ratio compared to the funds that you find on the stock markets. So do your own research. It's not financial advice what I'm telling here, but I'm mostly going to talk about the real estate ETFs that I found here on the European continent. And what was the performance of the global real estate sector? So I'm going to talk about it from 2008 till now. And when you look at it from that period, so in those 16 years, it went up almost 100%. And that means they have a compounded annual interest rate of 4.4% on your money when you invested in the beginning of 2008. And as you know, 2008, it was a really bad year for real estate. Then the market went down 42.3%. And also in 2022, because the interest rates of the national banks went up, the real estate sector went down. And now, yeah, it's minus 24.46% in 2022. In 2023, it started rising again because they were thinking that the national banks would already decrease the interest rate. But so far, we are already in the beginning of the 4th month of 2024, and so far the Fed and the ECB didn't move. I think they are wrong, but that's another thing. The SMB luckily dropped the interest rate already with 0.25%. And then, of course, we have 2011, 2018, and 2020, where the market also went down a bit. And if you look at then for the past 6 years, from 2018 till now, so it includes 3 bad years, so 2018, 2020, and 2022. It had 2 good years. It was 2019 and 2021. And then we had 1 okay year, and that was 2023 with a rise of 9.9%. And if you then add those all up, and it means that there was only 3.1 annual compounded interest made on your money, and in total it went up 20% in that 6-year period. And once again, it's not financial advice. You need to remember these ETFs, they only deal with one sector. I like the index funds that I discussed earlier for the global world, the developed world, the European ones, and the emerging markets. I like those more because they invest in different sectors together. Here it deals with one sector, so it's more cyclical. And on the other hand, you need to know that most of the ETFs that I've discussed so far almost always exclude real estate. So sometimes it's already mentioned and then it's excluding real estate in the name. But sometimes it's also mentioned into the index that the REITs are excluded, so that they don't take into account REITs when they look at dividend values. So if you want to invest in the real estate sector, most of the time it's the best thing to buy a specific ETF. But on the other hand, be aware, one sector, very cyclical. And to depict that, I also stress this. So if you invested from the beginning of 2008 till now, 16 years, you have return of 98.2%. If you invested at the beginning of 2009, you would have a return of 243.4%. So the moment you get into the market is really important. Okay, it's also the case for the other markets and the global markets and the emergent markets. But in this case, it's really, really, really clear that the moment you get into the market is really important. So certainly when you want to do it, either time the moment that you start buying correctly, but that's quite hard. So the best option is cost averaging. So put in money every month, every 3 months. And as you know, one of the things, the rules that I say is consistency is key. So consistent investing into the real estate ETF that you choose is then really important. So in this video, I'm going to discuss these 5 global REEs, so real estate ETFs. It's TRET, HPRD, GBRE, IWDP, GREIT. And the rules of the numbers that you will see on the next slides is the invested capital that I give is always in the currency on the SIX stock exchange or the London stock exchange. And you will see whether or not it's SIX or LSE on the slide. The performances are always corrected to Swiss francs valuation, and that's just so that they are comparable across the board. When you go and look at just ETF, you can find it there for British pounds. You can find it for dollar and euro and Swiss francs. So I always change it to Swiss francs to have everything equal across the board. The dividend yields are always calculated in the currency of the dividend. So that's also important, even when the currency of the ETF is different from the currency of the dividend that they pay out. I always recalculated everything to the currency of the dividend itself. So let's begin with the TRET, and that's the VanEck Global Real Estate UCITS ETF. So as you know, that's one of the ETFs that my wife and I chose to invest into real estate, but so far we don't have the money yet to invest in it. The only thing that I can say is it's double taxation here in Switzerland because it's a Dutch ETF. So you can see that with the NL ISIN code. Excuse me for that, I needed to take a sip of my water. But it's a really great ETF. Excuse me. And the total expense ratio is only 0.25%. And in the series, we will see much higher total expense ratio than this. On the SIX stock exchange, it's noted in Swiss francs. That's also really nice for us, of course. And the current price is 36.20 Swiss francs. And when I say current price, that's at the end of what day were we? The 28th. So the 28th of March. So the 28th of March, the trading day, the end was 36.20 Swiss francs for the TRET from VanEck. The currency of the dividend is in euro. Not surprising for a Dutch ETF. Most of the time they have euro paying out. They have 99 holdings, 277 million Swiss francs invested into it. And these are the performances. So the past year up 12%, the past 3 years minus 3%, and the past 5 years minus 4.42%. And since its inception, almost up 70%. And this is a lucky beginning in 2011, so a bit more than 3 years after the crash started to happen in 2008. So the value is here, comparable to the past 16-year performance of the global market. It gives 4 dividends per year in March, June, September, and December, and the dividend yield is almost 3.5%. And these are the dividends that it gave in the past year. So by all the ETFs that I'm going to mention, the first dividend is already the first dividend of 2024, and the other 3 are then the remaining 3 of last year. So yeah, I think this ETF is one of the best that we can buy, although of course we have double taxation. So then we can go to the next one, and that's from HSBC, the HPRD ETF. And yeah, it's a mouthful, but it's FTSE EPRA NAREIT developed UCITS ETF US dollar. It's an Irish one with a total expense ratio of 0.24. It's noted in US dollar, so 20.99 is the price right now on the SIX stock exchange. The dividend is also paid out in US dollar. There are 368 holdings and 665 US dollar invested into it, a full replicated type, and the past year performance is up 8.68%, the past 3 years minus 7.4%, and the past 5 years minus 10%. It also pays out 4 dividends per year, and it's in the months January, April, July, and October, and the dividend yield is a little bit higher than 3.5%, so or 50%, 3.50%. So a little bit higher than the TRET ETF, and once again, nice distributions, quite evenly distributed across the year, and that's also something different compared to other ETFs, where certainly the European ETFs, where you always have a much higher dividend in May, June, or July to see when the quarterly payment is made. But in real estate, yeah, the how do you say, the rent that they are receiving is more evenly distributed across the year, so they can pay out more evenly as well. So that's really nice about ETFs that invest into real estate. Then we have the GBRE from the SPDR, so the Dow Jones Global Real Estate UCITS ETF. Also an Irish one, total expense ratio a bit more expensive than the other two, 0.40%. Noted in Swiss francs, 29.67 is the current price on the SIX stock exchange. The dividend is being paid out in US dollar. There are 229 holdings in this ETF, and there is 213 Swiss francs invested into it, and it's the only sampling ETF from the bunch that I'm going to discuss in this series. So all the other ones are fully replicated ones, but the GBRE is a sampling one, and the performance up 8.3% in the past year, minus 5.6% in the past 3 years, and minus 9.8% in the past 5 years. And also paying out 4 dividends per year, once again March, June, September and December, and a dividend yield of 2.75% more or less. And once again, nice even distributions across the year for every quarter. And then we can go to the next one with IWDP from iShares, and that's the Developed Markets Property Yield UCITS ETF. So as you know, UCITS ETF, that's always because they are conform the European rules concerning ETFs, and it's a Irish ETF with a total expense ratio of 0.59%, so the most expensive one. Once again, BlackRock, one of the most expensive ETFs. Its currency on the SIX stock exchange is US dollar, and 22.8 is the current price. 348 holdings in this ETF and 970 million invested into this ETF. So one of the most invested into it, although the total expense ratio is quite high. And also the performance is actually not that great. So this past year only up 7.3%. The past 3 years down minus 8.60%, and the past 5 years minus 11.72%. So BlackRock only getting a lot of money and because of their name and not actually their actual performance. So always look at it. A lot of people automatically go to iShares to check out the ETFs, and when you look at it separately, you would say, okay, it's reasonable, up 7.3%, but compared to the other ETFs that I already mentioned, it's actually not that great, and the total expense ratio is also quite high. So 4 dividends per year, February, May, August and November are the payment months. The dividend yield is 3.23%, and yeah, once again, as the other ETFs, quite nice distribution of the dividends over the quarters. And then the last one for today, that's the GREIT. So it's yeah, again, the EPRA NAREIT developed ETF, but this one is green blue UCITS ETF. So a little bit more green, so to say, but when I look at the things that are in it, it's not more green or bluer than the rest of the pack, but yeah, it needs to have a name, of course. So the total expense ratio 0.25%. The price is actually quite high, 111.86 US dollar, but on the other hand, it doesn't really matter that much because we can't buy our ETFs right now anyway, because we don't have enough money to pursue our core satellite strategy that we set out to do. But that besides, so the currency of the dividend is also US dollar, There are 338 holdings in this ETF and 182 million invested into it. The past year it went up 6%, the past 3 years it went down 13%, and it's only been around since the 29th of June of 2020, so no result yet for the 5-year performance. And since its inception it went up 7.5% almost. Also giving 4 dividends per year, just like the other one in January, April, July and October, and a dividend yield of 3.43%. So more or less comparable to 3 other ones I already discussed. And once again, yeah, because the price is higher, almost 5 times higher than the other ones, here the dividend is also almost 5 times higher. So you're turning around $1 every quarter that you receive from this ETF. So if we look at the overview of all these ETFs, then you see that yeah, the TRET for me, it's the top performer. So across the board, it always performed better than all the rest. I don't know how VanEck does it, but most of the time VanEck has really good ETFs. And this time again, yeah, they really stick above the rest. Sadly, of course, you have the extra 15% dividend tax that you need to pay for the Dutch government, and then you need to also pay here in Switzerland the income tax on your dividend payment that you received. So that's a negative thing, but on the other hand, yeah, it performs way better. So past year, almost 3.5% better than the next contender. So that's quite nice. The total expense ratio not far off from the next contender, and yeah, the one from iShares, yeah, I don't know why it has the most money invested into it. So something you need to look into when you want to invest in real estate. Don't go immediately for iShares because look at that, the total expense ratio almost 0.60%, and that's more than double of the best 2 ETFs in fact that you can buy here in Switzerland and European continent. So with that being said, I thank you for your attention and watching this video. Please consider subscribing if you like this kind of content. Hit that like button as well. It helps out the channel enormously. And hitting the bell icon, that's totally up to you. As I said before, I don't do it often as well. So with that being said, thank you for watching and see you on the next one. Bye.